What's up everybody, welcome to the Stocks channel. My name is Corey and today in the stock market we see a pause as we go absolutely nowhere, and we do have a very large catalyst with CPI data this week. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, today I think we'll do something a little different. And I want to go ahead and humor some of the fundamental arguments, and I want to look at the chart and tell you why I follow price action and trend more than anything. So let's go ahead and get the obvious out of the way. Is there clearly a bear waiting just above with very critical risk levels at SPY 416 and 421. So of course that is a decent risk reward setup if you are taking short trades. However, you cannot forget that we are in a bull trend, which is completely different than anything we've seen in this entire year. And you don't want to just blindly short a bull trend because we're at resistance, because when we blast through that level, it is going to be very impulsive and is going to trigger short squeezes. So yes, you know your risk, and yes, it is a decent risk reward setup if you do indeed end up being correct. But just keep in mind, with the bull trend, you're only really looking for SPY to come down to about 408 or about 399, and possibly not even that low before we just see buyers of the dip form another higher low and continue the bull trend with something that would take us back up to SPY levels of about 430. So if you think the risk reward above 416 or 421 is worth only coming down to about SPY 408 or possibly somewhere around 405 to 404, then fine, you can take that short trade. There's absolutely nothing wrong with that because you're managing your risk. But if you are just accumulating short positions, assuming the stock market is going to do this, you are playing with fire and you are very likely going to get burned, because this is a highly unlikely scenario without a black swan event. If you're just accumulating short positions planning on a black swan event, you are actually just gambling, because there is no guarantee we are going to get a black swan event. And with the bull trend, this is highly unlikely, and actually extremely unlikely now with today's price action and the strength of the bull trend we currently have. So if you are accumulating short positions because you think this large arrow to the downside is coming in the near future, I would caution you against doing that, and I would make sure you start managing your risk a lot better than what you're currently doing. So just zooming back through history and through time this year, we never had the full bull trend with a bullish price action look like we currently have. And you can go back to the most impulsive rally we had in March, and by the time we were starting to develop the full bull trend, the price action was already rolling over and we were already starting to see higher volume selling. And that is completely different than what we see with today's chart. So the entire year of 2022, we had no bull trend with bullish price action except for the exact moment in time that we are currently in, which is full bull price action and full bull trend. You can see the 20 simple moving averages going to cross over that 50 EMA as soon as tomorrow, and we are still above the support trend line, and the price action is still above all of the moving averages. So yes, this is a decent risk reward setup for short trades, but your reward is really only defined by SPY 412 to about 408. So yes, CPI data is very likely going to be a catalyst, but don't rule out the possibility that it is a bullish catalyst and we just continue to go higher, which would only burn your short positions even more so. Keep in mind, the last time we had CPI data, it was the highest CPI data we have seen all year, and the market rallied afterward, which tells you the market is likely already looking ahead and the market already likely thinks inflation is peaking. So yes, we can talk about fundamentals all day long, and yes, you could probably end up being right, but the chart is already telling us what we need to know, and the chart is telling us it wants to go higher. So when you look at the technicals and you look at the chart, there's only two things that you should really have strong conviction in, and that is whether or not the trend is bearish, neutral, or bullish, and whether or not the price action is confirming the trend. Price action is king, so we always put price action before anything else. So we instantly get more bullish if SPY starts breaking above resistance, but we are going to be even more so bullish because we also have the full bull trend. So there is nothing that speaks louder than price action, and of course price action is what is causing sentiment to shift, because everybody that was bearish down here at SPY 365 is all of a sudden bullish up here at SPY 416, and the only thing that changed was the price. The same people that were bearish and scared to buy at 365 are now willing to buy at SPY 416, even though the fundamental picture has not yet changed. It is just the price action causing FOMO and triggering them to want to join the rally. So yes, the bear is just above, but keep in mind that does not mean that the bear has to win the battle. We will let price action decide that, and we will let the price action tell us everything we need to know about where the market is going from here. So with that out of the way, we are instantly going to get more risk off if SPY breaks down below 408, because below 408 we could very likely come all the way back down to 399. And of course, there's always the chance that support at 399 fails and we continue to go lower. So we can instantly get more bearish if price action loses support, but there is no reason to jump the gun and try to get bearish before we lose that support zone. So yes, we are bullish as long as we have the bullish price action and the full bull trends, and the next bull breakout will be above SPY 416 for the price target at SPY 421, and then above SPY 421 we will very likely see SPY in the 430s. And we will then challenge the fact that the bear market is completely over and we're going back into a bull market once we see that price action. So on a day like today, while we're consolidating, we're really just building a stronger bull trend, and the bears continue to pile in, only adding more fuel to the fire for the short squeeze. So yes, you can short at this level, but make sure you are managing risk very tightly because the bulls still have all of the advantage, and you need to start factoring in probability in your trades. While yes, you can short here, the probability that that will be a profitable trade is very low as long as you're in the bull trend, and that is why you should trade in the direction of the trend. On the Nasdaq 100 triple Qs, we were down 0.32% today, and as you can see, the triple Qs are currently battling the bear, and that is also going to put pressure on SPY if the triple Qs bulls cannot successfully defeat the bear at triple Qs levels of 324. So that is a very critical resistance level, and yes, you can short with risk defined at that level, but again, I will caution you against just blindly shorting because we do have the full bull trend. So your risk is defined very well at that level, but you really don't have a lot of reward to the downside as long as we're in such a strong bull trend. So triple Q's levels of support are very critical, around 319 all the way down to about 314. And those are two levels that could be the next higher low before we get the bull breakout and start trending up to about 338. Now, if we do get rejected from this resistance, it is still possible that this is the top of the local high in the bear market before we start making this next leg lower. But if we were going to make another leg lower, you will want to lose the bull trend or see price action losing critical support. Do not just assume this is the highest probability chance, because currently it is actually the lowest probability chance. So as I just said with the SPY analysis, make sure you are factoring in probability in your trades. And right now it is still more probable that the stock market is going higher and not lower, because we have the full bull trend and we have price action above all of the moving averages. So you can instantly get a lot more bearish if triple Qs breaks down below 314, because we will very likely come back down to the support level at 307. And then we could lose the bull trend and start to roll over and die if we are indeed going to continue the bear market. But I'm not going to guess, I am going to follow what the chart says, and right now the chart says that we are still bullish. In the Dow Jones DIA ETF, we were up 0.14%, and the Dow Jones did get the bullish breakout above that bull flag, and we do have price action above all the moving averages, and we are only one day away from having the full bull trend. So all of the indices are currently looking full bull and getting bullish breakouts. The next very critical resistance in the Dow Jones is just above at 333, and you will want to stay bullish as long as we're above 324, and below 324 we have the last line of defense for the bulls at the critical support at 320. So stay bullish as long as we have these bull trends and price action above critical support. And if we lose critical support, then we can instantly get more risk off and start to become bearish as we lose the bull trends. On the Russell 2000 IWM ETF, we were up 1.06%, and we see the IWM ETF is in short squeeze territory because we did gap up and we are now above the previous daily high of 191, which means IWM could start to short squeeze all the way back up to $200. Even though there is a very high probability chance that we will close that gap and test the breakout level as support before we go any higher. So for that reason, it is going to be extremely bullish if IWM bounces off of 191 and continues to trend higher. And you can see the small caps did go up on increasing volume, and we do have the full bull trend. So I continue to tell you, across the indices, the bulls have all of the strength, they have the benefit of the trend, they have plenty of strong support levels to buy the dip off of, and the bulls have the highest probability chance to continue to win this battle. On the ARKK ETF, we are up 1.46% as ARKK also joins the ranks of the full bull trend with the bullish price action and did hit our price target at $52. So the next price target above 52 will be the price target at 55.5. Critical support is still here at 49, so stay bullish as long as we're above 49, and instantly get a lot more risk off if we lose that critical support zone down there at 47. But for the time being, ARKK is back in the full bull trend, which very likely means we are out of the bear market in the ARK ETF. On the VIX, we were up 0.66% as we see the VIX still in the bear trend with price action below all the moving averages, and we have a very strong bear trend in the VIX with the next valid downside price target down here at VIX levels of 20. Stay bullish as long as the VIX is below 24 and get a lot more cautious if the VIX spikes above that resistance. On Bitcoin, we're currently up 3.4% as Bitcoin is trading right around $24,000, which is going to be a bullish breakout if we do close up here at this resistance level, because that will be another daily higher high after another daily higher low. You can clearly see this is a developing bull trend with the next valid price target at that resistance at 28 to 29,000 and then retesting 32,000 once we get the bullish breakout. Critical support down here is now at 23,000, so stay bullish while we're above 23,000, and you can get a lot more risk off if we break down below that support for a retest of 21 to 22,000. On Amazon stock, we were down 1% today after we did see that hard rejection from that very critical resistance at 144, and we came all the way back down to the critical support at 138.7, so it is going to be a battle of which level breaks first. Below 138, we can retest the low at 134, and if we break down below 134, we could come all the way back down to fill the gap, which is right around 123. The bull breakout above 144 should take us all the way back up to about 152, so do keep in mind it is going to be bullish above 144 and a lot more cautious to the downside below 138. On Microsoft stock, we were down 0.92% after we did start to break out above the price target at 283, but failed to close above that level and came back down to the 5 EMA. So this does look very close to gaining the full bull trend, and the next bull breakout will be above 283 for that next price target at 290, and then above 290 we can start closing the gaps above right around 296. Critical support on Microsoft is still down here right around 274, so stay bullish as long as we are above that critical support and we have the bull trend. On Nvidia stock, we were down 6.3% as Nvidia came all the way back down to the 20 simple moving average and the 50 EMA, and we are very close to having the full bull trend if this support can hold and we can bounce and take out the high. This could be the higher low in Nvidia before we get that next major bull market, which could take us all the way back up into the 250s, but we do have a gap to fill just above right around 187, and it is possible that gap fill could be resistance and we could continue to trend down lower. So do be a lot more cautious if we break down below 176 of that critical support down there at 161 and the gap fill at 157. As long as we stay above critical support at 176, you can stay bullish, but you will need to get a lot more risk off if we lose that support. On Tesla stock, we were up 0.78%, and Tesla is also getting to some very critical support after it did close the gap at 915, and that was instantly resistance before we saw more selling. So we are back down below the 5 EMA for the second day in a row, which means it is very critical that this support right around $860 holds up, or we could be coming back down to 839 or our 20 simple moving average right around 815. If we lose these support levels, this will look like a falling knife that could take us all the way back down to $800. So do be very cautious, and if you are buying the dip, wait for a positive bounce off of one of these support levels, because we could be coming all the way back down to close the gap, and you don't want to bother trying to catch a falling knife. On Apple stock, we were down 0.29% as Apple is continuing to struggle to close above that price target at 166, but so far we haven't lost the bull trend and we still have price action above all the moving averages. Above 166, the next price target will be the gap close at 174, and below critical support down here right around 163 to 159 will very likely close the gap at 157, which is also going to be a very critical support zone. So for that reason, you can get more risk off in Apple if we break down below 163, but you can stay bullish and you could even be a buyer of the dip as long as we are above 157. On the financial sector, we were flat on the day, going absolutely nowhere, but overall we are developing a bull trend and we are seeing price action holding above the 50 EMA. The industrial sector was also flat on the day, very close to having the full bull trend, and the price action is still above all of the moving averages. The healthcare sector was up 0.24% with price action above all the moving averages, and we do have the full bull trend, so the healthcare sector is still looking bullish at this time. The energy sector was up 0.52%, closing back over the 20 simple moving average, but it is developing a bear trend the longer it stays below the 50 EMA, so get a lot more cautious if it breaks down below the 20 simple moving average because it does have a gap to fill right around 69. So jumping back over to the S&P 500, while we do have critical data coming out this week, I think it's more important now than ever to follow what the chart is telling you and not just blindly accumulate short positions while we're in a bull trend. While it's still possible the market could come down for a next leg lower, it is looking more and more unlikely the stronger this bull trend becomes. For that reason, if you want to get bearish, I suggest waiting until we lose a critical support level and start to see the price action rolling over. Just blindly shorting strength is a great way to lose money in a bull market, and yes, we could be entering a bull market. Whether you want to believe it or not is completely irrelevant because the price action and trend are doing all of the talking and they are currently looking bullish. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF QQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.